So, what if the official health check for the world's biggest companies has a massive, invisible blind spot? Today, we're going to dig into a story of trust, technology, and a really critical flaw in the system, one that could affect every single one of us. It all boils down to this one question. When you invest your money, or even just trust a big brand, you're basically betting that their financial statements are the real deal. And that truth, it's supposed to be checked and verified by a corporate audit. But here's the catch. The rule book for these audits was written for an analog world, and now we're in a frantic race to catch up with our digital reality. All right, so to really get the fix, we first have to understand what broke. I want you to think back to the global financial crisis. It wasn't just about numbers on a screen, right? It was a fundamental collapse of trust. People looked at the glowing audit reports from companies that were, about to completely implode, and the whole world was asking one simple question: how on earth did everyone miss this? And the answer, well, it was kind of hiding in plain sight. The reports themselves were just a mess of confusing language. Imagine a doctor spends months on your physical only to hand you a report that just says, pass, and it's filled with medical jargon you can't possibly understand. That's exactly what these audits were like. Any real concerns the auditor had were buried in generic boilerplate text, creating this huge gap between the safety investors thought they had and the very dangerous reality. And look, it wasn't just angry investors saying this. In 2009, one of the world's top financial regulators, IOSCO, that's the international group that sets the rules for these things, they put it bluntly. They said a simple thumbs up or thumbs down is just dangerously inadequate for a multi-billion-dollar company. The system wasn't just flawed, it was fundamentally broken. So in the wreckage of that crisis, regulators got to work. Their solution? They decided to completely tear down and rebuild the audit report itself. They created what we now call the Extended Audit Report, or EAR. The mission was crystal clear: drag the entire audit process out of the shadows and into the bright open light. And you can see from this timeline just how urgently the world moved on this. The UK really led the charge in 2013. Europe and Australia jumped on board pretty quickly after that, and the US joined in by 2017. This was a massive, coordinated global push to rebuild the trust that had been so completely shattered. Now, the absolute core of this new report is a section called Key Audit Matters, or CAMS. And this was, no joke, a revolution. For the very first time, auditors had to drop all that generic language and explain in plain English what the biggest, hairiest risks they found were. They had to tell everyone why it mattered and exactly what they did about it. It was a total game changer for transparency. But here's the twist. Just as regulators were putting out the fires of the last crisis, a new, silent revolution was happening. The world's most valuable companies weren't just making things anymore. They were writing code. And this huge shift from physical to digital created a brand new and pretty much invisible blind spot. Just look at this comparison. On the left, you've got the traditional risks that auditors have been trained for decades to spot, stuff like tax errors or bad loans. But look at the right. The risks in a modern tech company are a whole different ballgame. Insanely complex IT systems, automated transactions happening in milliseconds, cybersecurity threats. These aren't just new risks. They require a totally different skill set to even begin to understand. And the evidence? Well, it suggests this blind spot is having a very real impact. A 2019 report from the UK's Financial Reporting Council found a really startling number. It found that 1 in 4 major company audits just weren't good enough. That's a 25% failure rate, way off their target of 90%. So even with these new, more transparent reports, auditors were still missing something crucial. And here it is. This is the heart of the problem. We're asking financial auditors, who are experts in numbers and ledgers, to make critical judgments on incredibly complex IT systems. It's kind of like asking a brilliant heart surgeon to diagnose a problem with a Formula One race car engine. They're both experts, for sure, but in completely different universes. This is the digital blind spot. So what's the solution then? Well, if the accountants can't read the code, you bring in someone who can. The research we're looking at today points to a really clear answer. It's time to call in the specialists. So meet the CISA, or the Certified Information Systems Auditor. Think of them as the special forces of the auditing world. These folks aren't just looking at balance sheets. They're stress testing firewalls, they're auditing algorithms, and they're hunting for tiny vulnerabilities deep in the code itself. Their entire career is built to see the very risks that traditional auditors are blind to. And becoming a CISA is no walk in the park. We're talking about a grueling exam, at least 5 years of hands-on professional experience, and a lifelong pledge to stay on the absolute cutting edge of technology and ethics. These are the certified pros who are trained to navigate that digital minefield. So the final recommendation here is to bring these specialists out from the back room and give them a formal, mandatory role in the audit process. It's all about creating a new gold standard for accountability in a world that, let's face it, runs on data. So what's the big idea? Well, it boils down to 3 simple but really powerful steps. First, for any e-business, the audit report needs to have a separate, dedicated section on IT risks. Second, that section has to be prepared and signed off not by the financial auditor, but by a certified IT auditor, a CISA. Simple as that. So why does all this matter to you and me? Because this isn't just about better paperwork. It's about stability. It's about protecting our investments, our pensions, in an economy where billions can be made or lost in a microsecond. It's about rebuilding trust in the digital companies that now shape pretty much every aspect of our lives. We've come a long way. We've made our audit reports way more transparent, which is a huge step forward. But it leaves us with one final, and I think unavoidable question. If our entire financial world now runs on code, shouldn't the people who audit it actually be able to read it?